What's up, everybody? Welcome to the November 3rd, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. November 3rd, that one threw me off a little bit. We're getting near the end of the year. We're really on the final stretch run of 2025. So let's get right into the stuff that we're watching for the rest of the year in the markets. Let's start with the Fed. So as widely anticipated, the Fed did cut rates one more time last week. But there was some cold water thrown on December. That is not a foregone conclusion. That's what Chairman Powell said about another cut in December. And you saw the reaction through the CME Fed Watch, is the thing that I watch from the probability analysis of the Fed's actions over the next meeting and the meetings subsequently thereafter. The probability went from 90+% of another cut during that period of time to now 60%. So still a majority, but significantly reduced. So enough of the commentary spooked enough of the investors to have them thinking that December may not happen. You didn't see a real dramatic market shift on this, though. I think partly because people were focused, to be completely honest, probably a little bit more on what was happening in tech earnings. All the big dogs of tech reported last week, which I'll get into here in a bit. But really, from the other side, it's just not, again, the Fed cut rates, whether, they got what they wanted from the Fed cut now, a little less certain, but I don't think people are at this point looking at it right now and saying, that the hair needs to be on fire because we're having real economic problems and you guys are being too restrictive. I think another one would probably be looked at favorably, but it doesn't seem the market is all that worried that they're going to stop at this point right now. That might be the other thing, is people might just be thinking that, well, they're posturing right now and the probability will rise before. I think that might be the case. But again, if we don't get one of the fewer data reports we're getting from the government right now is CPI. And again, CPI was slightly below expectations last round, but it's not like it's controlled at this point right now. So we need to figure it out a little bit. I think it's actually a better stance right now in saying we're going to keep our options open for December, try to figure out what the path is, try to figure out what inflation looks like, get a little bit more data, although it's very limited because the government is shut down. I'm sure the Fed has other avenues to extract some data as needed to make decisions about the largest economy in the world. At least I would hope they do have some alternative backup. I don't know what that is. There's obviously public related data that we can look at. But overall, I think they're just leaving their options open for December. So I think and I've largely been saying that December is a little bit more of an unknown than maybe the market was anticipating. Now we're more in that area and saying, hey, it's a probability, but the market didn't react, especially the stock market didn't really react massively negatively to it. Turning to number two, so the tech earnings, and I said it in number three, so I'm going to combine 2 and 3 here a little bit. Tech earnings are largely done. Tech and communication services, the big companies that are responsible for a lot of digital advertising and a lot of just, AI related things, all reported in the last couple of weeks. And I think the big takeaway that I saw, and JP Morgan had a piece out on this earlier today as well, is the digital advertising isn't slowing down yet. We haven't seen any indication that the appetite for advertising has waned. People are still spending aggressively to try to get their story out there. And why that's important to me is that's usually an indicator, that's usually the first thing you cut if a company is worried about the economy, is that they're going to say, well, you know what? Advertising is a discretionary expense. That's one we can reduce before we reduce our staff and labor force. We can reduce our advertising spending because we don't think people are going to spend a ton of money anyway. We're not seeing any evidence of that yet. So from a company's perspective and what we've seen in earnings so far, there doesn't seem to be any indication of dramatic slowing. And then secondarily, now we have kind of advertising spend. We have some proof that companies, at least, what they're talking about in their earnings, sometimes are always given with an optimistic glow, if you will. But the fact that they're still spending money on digital advertising is a good sign for overall company health. Now, again, that can change on a dime. So this isn't anything that we're saying, hey, we're a clear runway for keeping going in this strong market that we've had. We certainly could. But digital advertising, at least at this point, is not telling us we're turning into more negative territory at this point right now. And again, we've talked about number three, that the tech earnings are largely done. I think, most of them ended up kind of unscathed. The biggest one that took a hit was Meta. And I think it kind of makes sense. So if you think about all these companies that are spending aggressively, and the capital expenditure numbers are just bigger than anything we've ever seen before. I'm just being honest, is that this spend that they're putting towards AI, whether they're getting return on it or not, they're still clearly committed to spending these aggressive levels of money to try to get artificial intelligence permeated into the system. What we're seeing is most of those companies benefit from deployment. Google or Alphabet, Microsoft, Amazon, and even Apple to a certain extent benefit from deployment of artificial intelligence. Meta's a little different story. Meta's spending just as aggressively as all these other companies on artificial intelligence. But Meta's revenue stream comes from advertising, right? They're a social media network. It's dependent upon people looking and the eyeballs and chasing those kinds of things. It's not as dependent. Their business model isn't as dependent on artificial intelligence deployment to generate revenue. Now, what they'll say, and I somewhat agree with this, is, well, artificial intelligence is going to make us do our job better. We want to be productive throughout so that we can target ads better. We can do better things with the platforms we have, and plus maybe expand into new platforms in the future. Absolutely a viable argument, but I understood that if people are going to start getting worried about the returns of all of this spending, I think that's probably the first place they get worried about, is who doesn't benefit from this immediately and aggressively. And I think Meta is probably the weakest story there. Now, with that said, we actually we thought the reaction was a little overdone in Meta. And we also believe that the company will benefit from an artificial intelligence deployment, probably more on the productivity side. And again, the expansion of services. But we understand that they don't really necessarily benefit in the same way that Amazon, Microsoft, and Alphabet do. The next one up on the earnings side is consumer. So tech is largely done at this point. We still have a few companies, and this is still a busy week of earnings, but we're in a little bit of a lull in the action of who are, of sectors, right? We usually have financials, then it follows with industrials and healthcare, and then technology, and then consumer is usually the one that we pay attention to after that. We're in a little bit of lull here, but this is a broadly diversified week. So still a lot of companies reporting, a lot of important companies reporting, but just not that same sense of theme. But next week, we're going to start hearing about from the retail companies, your Home Depots, your Lowe's, your Targets, the Walmarts of the world. These kind of companies are going to start to report next week. And that'll give us a better indication of that spending. Now, again, we got some credit card data was good. Digital advertising is good. So we're still getting good signals about the overall economy. But there is some worry that we're starting to develop what they're calling a K-shaped economy, right? Is that asset owners and high net worth individuals are really benefiting from a strong market and are still spending in the same way that they were before. But the lower end of the economy, the middle to lower tier households, are starting to feel the pinch, and they don't have that wealth effect because they don't own as much in stocks and those kinds of things that the higher net worth do. So that's what the K-shaped economy is that the rise, the higher end tends to rise faster and the lower end tends to be falling. There's no massive proof of this at this point right now, but there is concern, and the consumer companies will give us a little bit more clarity about that situation to see if that is actually taking effect. We're hearing a little bit about it from the restaurant companies. We'll see if that proliferates into these consumer companies next. Lastly, and I'll end quickly with the Game 7 between the Dodgers and the Blue Jays. If you didn't watch it or not a baseball fan, totally get it. But I think, this is my hot take, I think that was the best Game 7 ever. It was absolutely insane. I'm even a little biased because being a Minnesota boy, I have 1991 Minnesota Twins in my bank, which was a 1-0 10-inning game, which was probably considered one of the best series and one of the best Game 7s ever. I've watched both of them, and I have to say this one just had more craziness and was, both were exciting from beginning to end. Anytime you have a Game 7 that's tight, it's going to be exciting. But from the side of how it unfolded and how it played, this Dodgers Blue Jays is going to be a tough one to beat. I mean, you had a play at the plate that was a fraction of a hair from winning the game. You had a collision that was a fraction of a hair of, if that dropped, they lost, and that kind of stuff. Just so many things happened that were so crazy. I think it was the best Game 7 ever. I'd be really interested to see if you all feel the same way. So hit the comments and see if you feel differently. But that's it. That's all we have for this week. Tune in next week where we'll have our next hot button topics. Until then, thank you very much and take care.